If you want to make a lot of money in the markets, you need to know this one thing. Markets move in either three directions: up, down, or sideways. If you look at the big picture, every time there has been an upswing in a cycle, the market eventually experiences a downswing to balance things out. These large movements up and down are called booms and busts. When things are looking amazing, everyone thinks their investments will go up forever. And when things look bad, people think their investments will go to zero. This is rarely the case. In market cycles, prices tend to overshoot to the upside and to the downside. And this actually happens because of the wild emotional swings that people have. Understanding these swings in psychology is an entry-level requirement when investing. You could think of these swings as a pendulum. People are almost always swinging toward or away from an emotional midpoint in the markets. And eventually, once they reach the extreme end of one side, the swing to the other side starts. The extreme emotions that people have in the market are euphoria and depression. And the prices that go along with these emotions are overpriced and underpriced. Using the S&P 500 in the stock market as an example, you might be aware that on average, it returns about 10% per year. But if you look at every year between 1970 and 2016, the S&P 500 returned 8 to 12% only 3 times. And more than a quarter of the time, it had returns greater than 30% or less than negative 10%. So the average and stable returns that people tend to like is not what actually happens on a yearly basis. And that's why you can't, nor should you, expect to get average returns from the markets. When excitement and euphoria kick in, the markets can and most likely will overextend to the upside. Likewise, when people start getting fearful, the markets could dip more than you would expect, unless of course you understand the cyclical nature of market cycles. Now, if you want to know how to play these market cycles and not get caught up in the emotional swings like the average retail investor, comment the word stable and I'll send you over a free video explaining how to invest into crypto intelligently.